Hey everyone, welcome back to the channel. Today, we're breaking down everything you need to know about the US stock market on this post-Christmas trading day, December 26, 2024. Plus, we'll dive into what you can expect for the next workday. Whether you're a seasoned trader or just someone keeping an eye on your portfolio, stick around, there's a lot to cover. Alright, let's talk about today's action. With Wall Street back from the Christmas break, we saw a mix of holiday cheer and cautious positioning. The S&P 500 gained 0.8%, closing at 4,895, thanks to a rally in tech and consumer discretionary stocks. Tech giants like Apple and Nvidia led the charge, with Apple climbing 2.1% and Nvidia jumping 3.4%. The Dow Jones Industrial Average also edged higher, adding 120 points, or about 0.35%, to close at 36,280. On the flip side, the Nasdaq Composite soared, rising 1.2%, hitting a new high for the month. Small-cap stocks, represented by the Russell 2000, were flat, reflecting a cautious tone among risk-sensitive traders. Energy stocks lagged today, with crude oil prices pulling back slightly to $75.30 per barrel. Now let's highlight the movers and shakers. Tesla's stock surged over 5% today after the company reported record-breaking EV deliveries in China for December. Meanwhile, the retail sector showed strength, as Amazon saw a 3% boost, fueled by reports of strong holiday sales. On the other hand, pharmaceutical giant Pfizer dipped 2% after disappointing trial results for a new cancer therapy. Bank stocks also remained under pressure, with JP Chase losing 0.8% amid concerns about rising delinquency rates on consumer loans. Economic data played a big role in today's trading. The Conference Board released its Consumer Confidence Index, which came in at a robust 110.3, exceeding expectations and signaling that consumers remain optimistic heading into 2025. Additionally, initial jobless claims dropped to 210,000 last week, reinforcing the strength of the labor market. However, bond yields ticked higher, with the 10-year Treasury yield rising to 4.1%, as investors priced in expectations for the Federal Reserve to keep rates elevated into the new year. This added some pressure on growth stocks, though tech managed to hold its ground. Looking ahead to the next trading session, here's what's on the radar. Futures are currently pointing to a mixed open, with traders keeping an eye on pending home sales data and another batch of corporate earnings. The energy sector might see volatility, as OPEC Plus is scheduled to release an updated production forecast that could impact oil prices. In terms of sectors to watch, technology remains a standout. Analysts are particularly optimistic about semiconductor stocks as demand for AI-related chips continues to grow. However, be cautious with financials and utilities, as rising yields could weigh on these sectors. So, what's the play here? If you're trading tech, keep an eye on earnings from companies like Micron, reporting after the bell. Their guidance could set the tone for the entire sector. Meanwhile, if you're in the energy space, pay close attention to any shifts in crude oil futures after OPEC's report. For long-term investors, this could be a good time to assess your exposure to high-growth names, particularly in sectors like technology and renewable energy. But remember, with year-end tax loss harvesting and portfolio rebalancing in full swing, we could see some added volatility. That's a wrap for today. The post-holiday trading session brought some excitement, but the real action might be just around the corner. As always, stay informed, stay prepared, and make those trades count. If you found this breakdown helpful, don't forget to like, subscribe, and hit that bell icon so you don't miss any future updates. Thanks for watching, and I'll see you next time.